Good afternoon, and welcome back to Live Lunch and Learn. I am your host, Lambros Demos, and a big announcement this morning as the Bank of Canada has announced that they are increasing the key lending rate to 0.5%. This is up from 0.25%, where it was for the last 2 years. And this is also an attempt to curb inflation. But how will it affect real estate? With me to discuss this topic and more is Mortgage Hall of Famer and friend of the show, Vince Gaetano. Vince has worked in the industry for over 30 years and was a regular on CP24's Hot Property. And now he is an Instagram sensation. Welcome back to the show, Vince.
How you doing, Lambros?
I'm doing very well, thank you.
Big
How are
day
you?
today.
Yes, big day.
It finally happened.
Finally, yes. So this is a little more news than the last announcement that we were waiting for.
Well, I don't think it's a big surprise. At the end of the day, we probably should have seen an increase in January with the lockdown in January taking place because of Omicron. I just didn't think the timing was right. And, it was just a matter of whether the unprovoked Russian invasion of Ukraine was going to cause any concern to the monetary policy announcement this morning. But the reality is a number of lenders have already baked in the increase. The fixed rates had been moving up the last 6 months considerably. Fixed rates are moving upwards north of 3% from the high ones. So, 189, the 199 are now 309, 315, 3.25.
Right.
So, it's only a matter of time before the variables go up. Now, as you mentioned, inflation in January was 5.1. The February number hasn't come out yet because it's still too early, but we anticipate it's going to be at that level or maybe even higher. Poor harvest, higher transportation costs has pushed food prices up. The bank wants to get to that 2% target for inflation. It had to be done.
Yeah.
And I think the announcement this morning made it clear that, the inflation pressures are going to require further increases with interest rates if inflation doesn't land and get under control to that 2% range that they want to be at. Now, what does this mean, right? The variable rate mortgage represents 25% of all mortgages in Canada. It's not the majority of product, but it does impact HELOCs as well, home equity lines of credit. So, our local branch is going to increase prime from 2.45 to 2.7 with today's increase of 0.25 point on the overnight lending rate. The variable rates will jump 0.25 point. So they're going to jump to 1.75 to 1.9, depending on how good a discount you negotiated off of that to 0.7 prime rate. Mm-hmm. And the HELOCs are traditionally priced at prime plus 0.5. So I think this is where people need to really determine if they want to be carrying high balances on their HELOC. And banks do a really good job of getting people to use these HELOCs instead of converting them into mortgage type products that are a lot cheaper now. To give you an idea, the HELOC sits at prime plus 0.5. So you're looking at 295 pre-jump today. So now that jumps to 3.2%.
Yes.
And where the banks get you is, well, it's an interest-only payment. There's no principal reduction. So people that are more concerned about cash flow opt for HELOCs over a mortgage that would still be below 2% if you secured a variable rate mortgage. Now, you're paying principal and interest, have you? But your rate is considerably less. And it's almost a point and a quarter to 1.5 difference. Yeah. And this is where I think people need to start thinking about converting this line of credit debt into a mortgage component. Yes. And I think this is where we're going to see a slew of business coming in as people start thinking, well, do I really want to carry large balances on my HELOC? Yeah. Because this is the first of a few jumps.
Gotcha.
And it's going to continue to go up. And do you want to start paying 4% on that HELOC rate when you should be paying probably 2.5 when everything settles? Because I think we're still going to see a few more jumps throughout the year.
Yeah, no, absolutely. I agree with you there. And thank you for that explanation. I was actually going to ask you to explain what this increased lending rate means and what it affects. So I'm glad you
Mhm.
mentioned that it affects only 25% of mortgages out there. So people have a better idea of what it is, but it also affects HELOCs. So thank you for that. So when do you anticipate this rate to go up to 2%? Because I know initially they were talking about the end of 2022, early 2023, and you're pretty bang on with your predictions. So what do you see
Well,
happen?
economists have been calling for 6 or 7 rate hikes this year, which I think is
Right.
absolutely insane.
Okay.
Um, what people need to remember is that the government has $1 trillion debt.
Right.
And if they start increasing rates at the rate these economists are looking at, how are they going to pay for the cost to service that debt? Because the government has to pay their bills too.
Hmm.
And I think what that ends up doing is it gets into increased taxation.
Okay.
And I don't know if the government is going to hold its power if it starts ramping up taxes on people, right?
Right.
So
Right.
I think there are some increases coming. I think there's going to be 2 or 3
Do you
this
think we'll
year.
see one next month, as soon as April, or are they going to wait a month?
Well, we should have gone up in January,
Oh, I see.
and the Omicron lockdown for Ontario, which is a big chunk of the economy.
Yeah.
When you're locked down in January, how are you going to justify increasing rates?
No,
Like it'd be a PR nightmare.
absolutely.
So I think what they did was, okay, we're back in action. Like last night, I was at the Raptor game, first game back, and it was a full house, and it
Nice.
looked like nothing changed other than
Okay.
people wearing masks. But food concessions were
Beauty.
open, the bars were open, everybody's having a good time. It seemed like
Good.
some form of
Good.
normalcy.
Yeah.
No request for a vaccine certificate
Yeah. That's
and
gone up in
validation,
the
which
list.
is so odd because we're so used to it now.
Yeah.
But
Yeah.
it looks like we're getting back to normal, and the housing market is on fire. It still is. The
Mhm.
immigration numbers that came out a couple weeks ago are bizarre. 1.3 million more people coming in the next 3 years,
Yeah.
432,000 this year, 447 next year, and 451 in 2024. Like that's 1.33
Yeah.
million more people, and they can't build houses quick enough. Like Ontario built 65, 70,000 homes last year,
Yeah. Yeah.
and where are you going to put these people?
No, 100%. Which I did want to talk about that actually, but before we get there, since you brought up real estate, let's talk about that first. Um, so we've already seen actually a subtle shift in the market. I don't know if you've noticed it on your end, but on my end, I mean, there's been anecdotal evidence that people aren't getting the bidding wars they wanted. They're not getting the prices they wanted. There's fewer offers out there. Not to say that the market has cooled down. Far from it. It's still a seller's market,
It's
but there's
moving
just
to a balanced market.
yeah, it is.
Like
It is
I think
moving in
that's
that
fair to say.
direction.
Like there's
Yeah,
not a lot of speculation. The 1.5 million and up. Like these are
correct.
people that are living in these homes. Like they're not renting them. They're
Yeah,
living in them. They're for self use.
that's right. That's
Yeah.
right. So, do you think with today's announcement that's going to continue, and with further announcements, do you think it's going to eventually get to that balanced?
Well, that's a very good question, Lambros, because I think this is nothing. Today's increase was
Mm,
literally nothing.
yeah.
The stress test, as much as everybody is vilified and called this thing the worst thing since
Yeah.
whatever,
Yeah.
uh, it's gonna be a hero. The stress test will save everyone
Yeah.
because you're still qualifying at 5.25%,
Absolutely.
and until the variable gets to 3.25%,
Right.
people are still going to qualify for the same amount of money they're going to qualify today.
Oh, that's an excellent
So,
point. Yeah.
so I think what people need to appreciate is how valuable the stress test is to the real estate market
Mhm.
because this increase is nothing. Now, if fixed rates start moving north of 3.25, then they have to start qualifying at 2 percentage points above the contract rate.
Okay.
And that's where I'm going to start explaining to people take the variable for a month, get your mortgage, and then lock in if you really want to do that.
Yeah.
Right.
Yeah.
Because there's no use if you're at 349 to qualify at 549, have a problem qualifying when you could take your 2% variable, you're still qualifying at 5.25, and you're in good shape.
Yep. Yeah,
Right.
absolutely.
So you got to think about this. But as far as how it's going to impact the real estate market, I think you might see less speculators, less investors, as potential cash flow becomes an issue carrying property,
Yeah.
which bodes well for those wanting to buy the home for their own use.
Hmm.
So I think you're right. We are seeing less bidding wars on the grand scale. There's still 2, 3 offers, which is fair.
Yep.
But I like the fact we're moving to a balanced market. And I think what we'll see is maybe a flattening of valuation for the latter part of the year.
Yeah, no, I agree with you there, and I'm hoping for that as well. We have a comment here from a viewer. Calvin says it means with another rate hike for the spring, this market is going to correct. Offers have already gone down significantly. This will get worse with today's hike as well, with more coming. So I'm not sure what Calvin means by worse. I guess it depends on his perspective. Worse in terms of less offers or
You know what? I always kind of chuckle when people think everything's going to correct. What's going to correct to? People who bought this year and may have paid a premium most likely aren't selling this summer.
Yeah.
People don't go through the expense of paying land transfer taxes, moving expenses,
right.
to sell a home in 4 months.
You're
Okay,
absolutely right.
so if price is correct 10-15%, that moves the needle back to maybe November,
Even
October.
20% takes us back less than a year, right?
Yeah, so those people are not moving.
Yeah.
They need a house. They just went through the exercise of finding shelter and building their home. They're not going to walk.
That's a great point.
And what people need to come to realize is that if there's a correction, it's only going to impact the person who is living off of high appreciated value and didn't sell at the top. Because chances are they've had that property for years and they're still making money. Nobody's losing money.
Yep.
And I don't know people that buy homes and sell them in 6 months unless there's a major marital breakdown. Okay. There's a severe issue with health.
Mm-hmm.
There's a death.
Yep.
And or job loss.
Yep. No, fair enough. Those are all great points.
And I think, this Chicken Little philosophy of the sky's falling, you got to get real. Like, it's not going to happen.
Yeah, I agree with you 100%. And there needed to be some kind of hosing down of the market. It was just way too much in December and January. There wasn't enough supply. And although the TREV numbers haven't come out yet, I did take a look myself because I was curious. And I knew there was a lot more listings in February than there was in January. And these are some of the numbers, unofficial numbers. I mean, I saw in Toronto, Peel, and Halton regions, freehold properties increased by 85%. So they jumped up from 28 to 22 in January to about 52, 27. So almost double.
Which is good, right? Because it just makes for a healthier market.
Healthier market, that's right. And I spoke to that in my market update video, that buyers might get some relief. And the same across the board. I mean, condos jumped up on average about 50%. Semis and detached homes around 81%. Townhouses up over 124%. So that is great news. I agree with you there. That is great news.
It almost the government not doing anything by increasing the cap on high ratio insurance may have been a blessing, because there's all this talk about them increasing the cap from $1 million to $1.25 million.
Right.
And when something like that happens, what it does is it just inflates everything at 990 to 1.2.
Yeah.
Because there's now this flurry of buying activity for people who don't have the downstroke to come up with the 20% to get into that market. And I'm of the opinion that not everybody deserves to be a homeowner.
Really?
Right? Like, where does it state that everybody has to have affordable housing? Renting's okay. People don't have emergency funds to deal with new roofs, new windows, renovations, a furnace blowing up,
Yeah.
air conditioning going down. And you know, some people just like paying rent and not worrying about it.
Oh,
And
certainly
that's okay.
that's okay. Absolutely, that's okay. I'm not saying it's good or bad, but many people want to own a home, right? And that's
Mhm.
why I think that's been driving the demand up, the fear of missing out, right? FOMO. So that certainly has been driving up demand. Um, but let's switch gears here a little bit. Let's talk about the there was an announcement as well, the task force that
Yes.
they need to build 1.5 million homes within the next decade or so, if my numbers are correct. What do you think about that? Is that a realistic thing?
You know what? The task force report was quite interesting. It's a great read. I really enjoyed it, and it was a smash mouth 50 plus odd recommendations, and it
Yes,
just went after NIMBYism.
yes, yes,
It went after the politics of how counselors have to cozy up to NIMBYs to not pass
exactly. So be
certain
reelected.
requirements, right? So it was an eye opener, and you know, one thing that really um, stuck out at me was a couple of the case studies that they pointed out. Like they talked about a subdivision of 500 and some odd properties in southwestern Ontario in the 60s, and it
Mhm.
took 9 months to get approved. Okay,
Wow.
and it included 500 and some odd homes, a park, a mall, a school, and it got approved. It had like 10 items that needed to be dealt with, and the builder and developer had them all sorted out within 9 months, and they got their permit and they built this thing.
Mhm.
And it then fast forwarded to 2010, a similar type project in Ontario, 50 some odd requirements, 18 different consulting reports from different departments, ministries, uh, environmental studies,
Right.
and they think that it'll take 17 years to get to approval.
Oh.
Like 17 years. Like my youngest son is 17 years old. So
He's
I
gonna be.
would have to spend his whole current lifetime
That's right.
to,
Exactly.
to go
Wow.
through something like that. And it just becomes an eye opener as to how backlogged and how much red tape there is to get anything done. So the task force, to your point,
Yeah.
Lambros, is they want to build 1.5 million homes in 10 years.
Mhm.
This task force should have come out 10 years ago,
Absolutely.
right? Because the reality is we need bodies now to
Yeah.
start building. And if Ontario can only build 65, 70,000 homes today,
Yeah. They have to
where are the
double.
skilled trades?
Exactly. That's why I asked you if you think it's realistic, because I don't think it's realistic. But I don't know how they're going to do that.
Well, I think some of the infill stuff could be
Hmm.
done quite quickly by eliminating these appeal processes.
Right.
And it just showed, like, I think they want to increase the appeal fee, a third party appeal process from $400 to $10,000
Hmm.
because they realize that these neighborhood associations put an application down with $400 and it could delay a project for 2-3 years.
Yeah.
And you know, it's just NIMBYism. Like
Right.
when I read the task force report and all the objections,
Hmm.
every association was down Yonge Street in the higher end neighborhoods. And I'm going to say it, they're racist. They don't want poor people or people renting in their neighborhood. And it is the, you know, Avenue Road, Ratepayers Association, Bedford Park, Yonge and Lawrence, everything in all the highfalutin neighborhoods.
Mm.
And the reality is they don't want tenants in their neighborhood.
Yeah. Yeah. No, it's
And it's
true.
sad.
Yeah. Absolutely. So it'll be interesting to see where that goes and how, if they're able to do that, because you said that the political influence is huge, right? Because if councillors want to be reelected, they have to listen to the NIMBYs, and it'll be interesting to see how that
It's a
plays.
great read. I really got a kick out of it. I think it's common sense stuff. And
Yeah.
they put a group together that they interviewed everybody in the industries. They were, you know, primarily some private citizens, some people who want progress, and they called a spade, and it was a common sense report that really hit hard.
Yeah.
And people need to realize that the levels of government, the three levels of government, are not aligned.
Yeah,
They
absolutely.
they do not know what the right hand is doing with the left. Like, we had a housing minister, the
Mhm.
federal housing minister had an announcement
Yeah.
about a month and a half ago, and it was press releases um, making a big announcement. And they announced that they're building 74 affordable homes in the Kitchener, Cambridge area. 74, not
That's right.
740, not 7,400, not 74,000. 74. Like, at that pace,
Yeah.
like, nothing's ever going to get done.
Yeah.
Now, if they were going to build 74 homes on Mars with
Yes.
Elon Musk, now that's a story,
Yes.
right? But 74 homes is just not going to cut it.
Yeah, no, you're absolutely right. And I remember talking to you about that as well. That's why I mentioned off the top this announcement today was that was I was referring to that announcement because you were waiting in anticipation for that announcement only to hear about the 74 homes. Yes.
It's a joke. Like,
It is a joke,
I
yeah.
just don't get it. Like,
No, you're absolutely right.
where are
Absolutely
these people going to live? 1.3 million. Like, why aren't they talking to the municipalities? Where's the support systems? Like, you want to bring refugees in here? Where's the support system for them? Where's the help? Um, the social welfare
right. Mhm.
to get them assimilated with our communities.
Yeah.
Yeah, you could rely on, the Ukrainian community per se for this specific situation, but that's relying heavily on sympathetic people,
Right.
right? But long term, how are you going to handle it?
Yeah. Yeah. Speaking of Ukraine, and I don't want to just keep jumping back and forth, but how do you think this is going to play out um, as far as the economy goes here in Canada if things get worse, if things escalate over there?
Wow, you know, Lambros, that opens up a lot of issues, and one where money laundering needs to be dealt with, right? Because, with the Freedom Convoy and the Emergencies Act, and being able to freeze people's accounts for nominal donations,
Right.
and trying to freeze, these oligarchs' funds, and seeing how much assets they have over here. Um, like Abramovich, I was just reading today on BNN that he's got refineries, or some type of ownership of some um, resource producing companies in the Alberta, um, the province of Alberta in Edmonton.
Right.
And wow, they got assets everywhere. And I'm stunned at how quickly they can freeze stuff. But with all that laundered money coming in from Hong Kong,
Mm.
through Vancouver, through the casinos there, they
Right.
did nothing, and they didn't care. And I'm really interested to see how um, they're going to react to everything, because we FinTrack's a joke.
Yeah.
FinTrack is literally a joke. People
Right.
file reports and they get put in bankers' boxes and sit in the warehouse.
Right.
They did, I think, 200 audits that did nothing. 200.
Wow.
And the amount of paperwork we got to go through to get a mortgage approved for down payment validation is ridiculous.
Right.
And millions and millions are coming in duffel bags, buying up property that are empty. And I don't know what impact it has on real estate values, but it does have some.
Yeah, I'm sure it does. It's interesting to hear it from your perspective, though. So, and I'm curious, have you ever run into a situation where you've gotten a mortgage application and it was, in fact, fraud or a money laundering situation?
Absolutely.
Yeah.
When we validate the income,
Yeah.
not so much the income, but where the down payment comes from. And when it comes from countries that are sanctioned,
Mm.
we have to put the brakes on it. Say, listen, you said you had the down payment and investments. Well, now they're giving me paper like it's coming from, Iran, Hong Kong, Saudi Arabia,
Right.
some sanctioned countries that there's no paper trail. You don't know where this money came from. And
Yeah.
a wire document isn't going to help.
Yeah.
We need to know, like, is this a real relative? Your names aren't the same. Like,
Exactly.
help me understand who's gifting you. Why is this person gifting you $500,000? Like, can I find friends like that?
No kidding.
like,
Yeah,
like,
you adopt me.
like I don't understand, right? So like, this is where you got to wonder, like, this
Yeah,
stuff does happen.
yeah,
Um, it impacts the person who has saved, wants that house as bad as that person, but doesn't have the resources or this pipeline of cash coming in from another country that, like, I don't know, Lambros. China says they have a cap of $50,000 that could get out of that country, and millions are pouring out of there. So, like, the banks are allowing it to happen. Like, these funds have to funnel through a bank. How's a bank allowing this to happen when they know there's a $50,000 cap that China uh, has on any external funds leaving the country? Like, help me. Like,
that's
am I making this stuff up, or
no, no, certainly not. But I'm assuming it's a small percentage, right? It's not
I
something
don't
you
know.
every
Like,
day,
you
right?
read some of these reports. Like, there was a story about some Chinese billionaire. He's funneled 150 some odd $1 million into Canada and bought a whole bunch of
Right. I saw
properties.
that. I saw a young guy, right? Yeah,
Young
yeah,
guy, and they
yeah, yeah.
can't find him. And
I
and
know.
he's got this web of corporations hiding all these assets, and they're putting this together, and it's like a whole, like, it's a whole investigation,
Yeah, yeah.
and it's crazy. It's absolutely crazy, and you just wonder. But
Hmm.
you know what? Who are we? We got a government that doesn't care. And I always look back on a video during the 2015 election, how home affordability was a priority for this liberal government. And come on, like, a
I
lot of
love that.
people got rich, and as long as people's home values go up, no one's going to touch it.
Yeah, yeah, that's true. That's true. Wow. So we have a very nice comment here as well from Karen Carrington. Great show and awesome guest.
Oh, thank you. Always enjoy the program. Love the format, and I like the open concept where we can talk about anything.
Absolutely, absolutely. Thank you, Karen. That's very kind. Excellent. So we're just approaching the half-hour mark here. Was there anything else you wanted to touch on, Vince?
Yeah, going back to the big issue of the day, and that's the Bank of Canada increasing rates. I caution all the viewers and anyone that's carrying high balances on your home equity lines of credits.
Okay.
Call us. Let us guide you through the process of converting that into a mortgage component. There's some really great products that some of the banks have today that have these hybrid mortgage line of credit products. And the line of credit product is a great flexible tool to use for short-term situations. But if you're carrying balances for a while, it's a good idea to convert them into a mortgage component. The Scotiabank STEP product is one of the best ones out in the marketplace. They inherited it from the National Trust
Okay.
purchase. It was like the Swiss Army knife that they had, and they just kind of
Yeah.
realized they had it on the shelf, and you could convert it into 6 products. You could have 6 mortgage components within it. So if you have taxable type, non-taxable debt, so something used for personal, you could break it off into a component. And if you're using certain funds for investments, you could break that off, and your accountant's going to be happy. You're not commingling funds, and CRA's happy when you're filing taxes and deducting certain interest expenses against investments and keeping it separate. That
Mhm.
commingling is a big issue with CRA. They could disallow the whole thing, but by having it separated is a real good advantage from a tax perspective.
Mhm.
So, I like making sure people are set up properly, minimizing their cost of borrowing.
Yep.
And, with rates starting to move up, and we're going to see a trend over the next few months and maybe 18 months
Yep.
of slow increases. It's going to start creeping up, and every $100,000, 1 point is $1,000 in interest. And depending on your tax bracket,
Yep.
you got to earn. If you're in a 50% tax bracket, you got to earn 2,000 to keep 1,000 to spend on interest costs. So
Yeah.
I always try to break it down into dollars and cents for people, because I don't think everybody understands what a quarter point is, what a 1 point increase means.
Yeah, no, I'm glad you mentioned that. Put it in numbers that people can actually
Yeah,
digest.
and that's why we have whiteboards in the office. When people come in, we really do a lot of whiteboarding so people understand exactly what the costs are and what the difference is between fixed and variable and the opportunities that present itself.
Yeah.
But what I will say is, I'll leave you off with this. If you're on a variable, increase your payments.
Hmm.
You're most likely able to afford more because you qualified at the 5.25% rate.
Yeah.
Increase your payment as much as you can and hammer down your debt. Because if you could reduce your balance that you owe to half of what you owe today before rates double, your cost of borrowing is exactly the same.
Got
So
it.
if you have a $200,000 mortgage and you're paying 5%, you're
Yeah.
paying $10,000 in interest. If you could get that 200,000 down to 100,000
Yeah.
before rates go to 10%, you're
Right.
still paying $10,000 in
Absolutely.
interest.
Absolutely.
And what we try to do is really try to help people understand how that amortization schedule can work in your favor.
Mm.
And by accelerating that debt, how keeping your lowest borrowing cost at the beginning of your mortgage and not caring that it goes up when you owe less
Yeah.
makes a big difference.
Absolutely. Actually, we have another question here from Angela. Will all funding institutions carry the same interest rate?
For the bank prime, yes. So most will be sitting at 2.7% effective tomorrow or whenever they bump up. They'll probably bump it up on the weekend. But some big banks will do it today because they
Right.
can. They're
Exactly.
always slow to reduce and quick to increase.
Of course they are. Yeah, absolutely. And one last comment here. You are nailing it, guys. Nice stuff from Mohammed. Thank you,
Thank you
Mohammed.
so much.
Much appreciated. Thank you, Vince, as well. And thank you to everyone who tuned in. I'll put up your contact information here. So reach out to Vince and he can guide you through your situation. Any parting words?
Don't worry too much about today's Bank of Canada announcement. It's not the end of the world.
Yeah.
Variable rates are still considerably less than fixed rates. So the fixed rate train has already left the station.
Yeah.
Don't worry about it. If you need some help, call us. We'll guide you through it. Watch our weekly Instagram show, The
Yep.
Wise Old Owl Show. I do it every Thursday at 4 o'clock. We're going to talk about this week.
Excellent.
And we're going to settle everybody down and let them know that there's ways to protect yourself from rate increases, and using good strategies and plans will get you through it without any problems. But I really love being on the show. I am excited to come back. It's always a lot of fun, and I really appreciate the opportunity.
Vince, thank you very much.
All
Thanks
right,
again.
take care.
Everybody, take care. Have a good day.